So let's get started. Thanks so much for your patience. We're looking forward to this webinar. My name is Elizabeth Aloni and I'm with Schneps Media. We're the largest media company in New York City, and we publish over 70 newspapers, magazines, websites, webinars, podcasts, and events across Queens, Brooklyn, the Bronx, Westchester, Manhattan, and Long Island. Today, we're thrilled to bring together a phenomenal team to share with us about buying and selling real estate in New York during COVID. I want to introduce to you our three experts that we've brought together. One is David Lau. He's a realtor with Keller Williams Realty of Greater Nassau in Garden City. That's the gentleman with all the wonderful quotes. He's been a full-time realtor since 2004 and has sold hundreds of homes throughout Queens and Nassau counties in his 16-year career in real estate. He's an accredited buyer's representative as well as an accredited home stager. Throughout his career, he has won numerous awards for his sales volume and production. During the recent COVID-19 pandemic, as a solo agent, he was still able to put new homes on the market and currently has 3 homes in contract that were sold within the last 2 weeks. David's basic philosophy in real estate is that it's all about his clients, not about him. What are his clients' needs? What are their goals? What are their expectations? He believes that only by asking questions can he determine how to best help his clients and effectively do his job. With almost 50 client testimonials on the major real estate portals, he has a history of delivering top results for his buyer and seller clients. Wonderful to be able to have David with us and his expertise, and we'll be hearing from him very shortly. As the mortgage banker, we have Amrish Dias, and he is a professional and experienced mortgage banker for over 20 years. Some previous companies he has worked for has been Wells Fargo and Merrill Lynch. He's helped all types of clients with their real estate financing needs. Whether it's buying or refinancing, he's been the honest and dependable person to count on. He prides himself in customer service and making sure his clients know every step of the process so there are no surprises. His motto, under promise, over deliver. He manages his clients' expectations so they're never disappointed. United Mortgage Corporation is a direct lender, which is extremely competitive and has one of the lowest rates in the market. You can be certain he's on top of every application to assure the closing process is very quick. For his clients, he's always accessible 7 days a week. He believes in making the mortgage process simple, quick, and jargon-free for all home buyers. Whether it's a new development building, commercial financing, or even non-traditional financing, his team and he are able and there to assist. We'll look forward to hearing what all of he has to say. And the third person in our dream team is Matt Rubino. He's the principal owner of the law offices of Matthew A. Rubino. Matt is admitted in the states of New York and Ohio, as well as in the eastern and southern districts of the federal court system. His main practice area is real estate, but also helps his clients with bankruptcies, foreclosure defense, and probate administrations. If it touches or affects a piece of property, he can definitely handle the matter. Matt prides himself on communication with his clients, whom he regularly provides with his cell phone number. He represents many Spanish-speaking clients and his multiple staff members who are bilingual. Matt was born and raised in Nassau County, where he currently lives with his wife, Elizabeth, what a great name, and young son, Matt Jr. He's an avid fan of sports teams that lose, i.e. the Mets, Jets, Islanders, and Knicks, and spends his free time playing golf and being with his family. Matt's main office is located in Syosset, but has no problem traveling to meet clients where it's most convenient for them. Quite the team, and we're excited that they're here. So we're going to give an opportunity to speak with each of them, and I wanted to get started with David. And as we look at getting a home and selling a home. So David, welcome.
Hi, everybody. I want to thank everybody for joining us today. Hope everybody is safe and healthy. I know it's been pretty grinding. Last couple months has been trying for everybody. So I appreciate you guys being here.
Absolutely. So David, tell me, what is the state of the real estate market today?
Real estate market right now is actually very, very robust. You know, right before this webinar, I went in, my office pulled up some numbers for me, just so, because numbers don't lie. So I'm just going to read some of these numbers to you guys so that you are aware of what's going on right now in Nassau, Queens, and Suffolk counties. Last year, in May of 2019, there were 5,322 houses on the market. This year, we have 5,550 houses on the market. So the number of houses on the market last year versus now is basically the same. And we also took a look at how many days on market houses sat. So how long did it actually take to sell some of these homes? And in 2019, the average days on market for homes in Nassau, Suffolk, and Queens was 83 days. And at the last look, which was today, the number of days on market for homes in Long Island and Queens was 84 days. So what we're seeing is that the market last year at this time and right now are essentially the same. So we had a strong market last year, and we have a equally strong market right now. Buyers that were hoping that the market was going to come down and they were going to get some kind of bargains on their houses. Unfortunately, I'm not really seeing that is really taking shape based on the numbers that I see.
That's amazing. You wouldn't think that that was the case with everything going on, to find out that real estate really is in the same place that it was last year. That's a hopeful sign, I would say, for buyers and sellers. So what, I guess, the thing to think about when all this is happening and with COVID, what are some of the safety protocols that are in place to help sellers and buyers?
Okay, so right now, New York State has handed down a whole bunch of protocols that we have to follow when we bring people to see homes. Now, New York City hasn't entered phase 2 yet, but Long Island has. So we've been in phase 2 for about a week right now. And right now, we are allowed to do one-on-one in-person showings to homes, but there are protocols that they have to follow. In other words, you can only have one person or one family in the house at any given time. Anybody that enters the house has to have a mask. They have to either put on a fresh pair of gloves or Purell themselves as soon as they walk in the door. Either they have to remove their shoes or they have to wear booties. But the most important thing is, when you're in the house, you have to exercise social distancing, and really only one family in the house at a time. And I just wanted to also mention that even though New York State is saying that we can do in-person showings, doesn't necessarily mean that that sellers necessarily want people going through their house. There are still a lot of people out there who are older. They may have compromised immune systems. They may have underlying health issues that, even though we are allowed to bring people in, they may not want people going through their homes. So just keep that in mind as well, and don't take it personally if you can't get into a house. Sometimes there are underlying health issues, and really everybody's health is the most important thing.
Yeah, absolutely. Well, it's good to know that those measures are in place to protect people and to allow real estate to continue. So would you consider this a good time to sell for someone who's thinking about selling their home?
So right now, there's never a bad time to sell real estate. The market is pretty robust right now. As a matter of fact, I took a look at the numbers in Queens and Nassau, and the average sale price of a house in Queens is actually up 5.9% from May of 2019. Wow. And the average sale price for a home in Long Island, it actually went up 10.4% since the same time last year. So it is a pretty good time to be a seller in this market. There is a lot of demand right now. There are people that may have been, crammed into a 2-bedroom apartment with 4 kids, and they've been stuck there for 3 months now, and they just kind of realize that this is just not enough space for us. So there's going to be people looking from that aspect. There's going to be people looking that may have been living in Manhattan and finding that all the things that appeal to them about living in Manhattan, restaurants, bars, Broadway shows, all convenience to your job, a lot of these things aren't really happening right now. And the fact that telecommuting is becoming a big part of, an acceptable part of a lot of companies, the appeal of living in these big metropolitan avenues with a lot of high population density isn't what it used to be. And there are going to be buyers looking to head out maybe somewhere where there's some grass and a little bit more space that they can walk around in. So it is a good time to be a seller. because there is a lot of demand out there and not enough supply, which has been the case for years and years now.
Wow. So it was a tight market before, and now you have a lot of new people coming in looking for inventory. So for a seller, that's pretty
Not a bad
good.
place to be. Yeah, not a bad place to be.
Right. So what about in terms of buyers? You know, what are some of the strategies that you would recommend for people looking to buy today? You know, because obviously it's a tighter market. You know, what are some tips that you have for buyers and sellers for sellers to stand apart because they want to move their house at the best price possible, and for buyers to be able to get in there and be able to buy something before it's gone?
So the first thing I would recommend, let's talk about sellers real quick, okay? Because
Okay.
there's literally thousands and thousands of real estate agents out there, and the lights just went out. Hold on a minute. You guys can still see me? Okay.
That's weird.
Yeah, that's weird. Maybe it's motion censored. I don't know. But basically, let's talk about sellers real quick. All right, sellers right now, there's thousands of agents out there, and you really want to find somebody who.
I apologize.
Sorry about that. There's thousands of agents out there right now, and you really want to find somebody who is, number one, they want to be proactive. They want to know, you want an agent that is going to know what to say and what not to say about your home. You want somebody who's going to look to see, are there any open violations on the property? Are there any liens on the property that you might not even know about? Some people have sidewalk liens that the city put on their property that they don't know about. If you want to find an agent that's going to be proactive and find these things out before they put the house on the market, so they can start addressing these potential issues before you put the house on the market, as opposed to waiting until later when you've already found a buyer, it's already gone to contract, you've already gotten your commitment letter, you're about to close, and then they do a title search, and now you find out that there are these liens and open permits that you are now going to be tied up 2 or 3 months trying to address. So find somebody who's going to be proactive at the beginning. You want to find somebody who knows how to stage, okay, who knows how to stage a home, because right now you only get one chance to make a first impression, and right now 9 times out of 10 that's going to be online. All right, so people are going to be looking at your house online before they ever step foot into it. So having the home professionally staged, or at least having somebody who can guide you through the staging process, is really, really important. Number 3, you want to get somebody with the professional photographer. I've seen so many listings where it was obvious that the agents just walked through with their cell phone and started snapping pictures of each room. Okay, it's not going to cut it in today's market where sometimes people are buying houses sight unseen. A lot of professional photographers will also put a floor plan together. So you got professional photography, you got floor plans, you have find an agent that has a 360 camera, whether it's Matterport or Ricoh. There are a couple different companies out there that they have these special cameras where you basically pop the camera in the middle of the room and it looks like you're standing in the middle of the room turning in a circle. So there's nothing hidden there. So you have professional photographers, floor plans, and a 360 tour, and maybe even a guided video walkthrough of the property, so that people, you know, it's like 90% of buying a house without actually physically being there. Okay, so that's really important for sellers, those couple things. And the last thing is really find somebody who knows how to negotiate on your behalf. So for sellers, those are the main strategies I would really advise. For buyers, because it's such a tight inventory market, my number one recommendation is find a buyer's agent, okay? When you go out and you look at houses and you don't have representation, that agent that is showing you that house is not representing you. They're representing the seller. Their job is to get the seller as much money as possible. I think as a buyer, you really need to find somebody to represent you, okay? And you got to find somebody who's familiar with the market, who knows the houses that they're going into, who knows what the average list price is, what the average sale price is, what the average price differential is between listing and selling price, and really who's able to give you the information that you need for any particular house that you're interested in. So I think that's the most important thing when you're looking for a house. But even before you get to that process, you got to get pre-approved, okay? You have to be able to show not only the seller of the house that you're ready, willing, and able to buy the house, but you also a lot of agents right now, because of the COVID situation and in terms of personal protection, they're not going to just take anybody out to go see houses. They want to know that you are a real serious buyer, and having a pre-approval letter is one way of showing that.
Well, that's a really great point. As one of the things that have changed so much is how strict they are about who they even let in the home, which is actually brings us to Amrish, because that would be your expertise, talking about pre-approval and mortgages. So can you speak a little bit to the importance of the pre-approval process and what people need to know about that?
Yeah. So the whole idea of pre-approval is to understand what somebody can afford. So the concept is basically to understand their finances and see if they can afford $1 million home or a $300,000 home. You know, how is their credit? Do they have enough money to even buy a home? So my job is to assess their finances. And it's very easy to do that by looking at their finances, asking them questions, running their credit. Everything is free and confidential. And it gives them a better establishment of what are their monthly payments, maybe some advice on how to fix their credit. What are some avenues on how to obtain the funds to maybe buy a home, maybe get gifts or withdraw funds from the 401k. So the 401k, the pre-approval is a huge importance, because not only is it allowing them to understand what they can afford, but it shows that they're a legitimate candidate to go buy a home in their specific needs.
So it's important both for them personally in terms of making their decisions about what they're going to see, and then it's also important for them in order to be able to see
Absolutely.
that they want to see during COVID.
Correct.
But what are some of the current interest rates, and what does that mean for home buyers? We're hearing so much.
Yeah, so rates are absolutely low. They've hit a nearest historic bottom. They're ranging anywhere between 2.75 to 3.25 based on their qualifications. And really what that means is that the affordability level is a lot stronger. So people who are maybe have tried to apply for a home years ago can afford more now due to the fact that the rates are lower. Rates low also means lower payments. So that's also helpful for people to maybe buy a bigger home or afford more. I remember actually working with a client who came to me 3 years ago, and they were only able to afford $400,000. And they came back to me this year, and now we were able to put them into contract, and they were qualified for $100,000 more. So it's quite a big difference.
That is a really big difference. So it's really important to speak to you maybe even before you're choosing what home to look at.
Yep,
so
absolutely.
That one can know what they could afford. So, you know, on the other end of the spectrum, you know, there are some homeowners who are exploring different avenues to lower or to halt their mortgage payments. Can you tell us about forbearance and the pros and cons on that?
Yeah. So since the COVID-19 pandemic, obviously people's finances have been affected, whether they've maybe lost their jobs or they're on a temporary pause for their work. So it's been a big effect on what they can afford and thus their mortgage payments. So a lot of the lenders have come out with a new policy where they're allowing forbearance, which basically what that means is it's giving them a temporary status to pause their mortgage or even lower their payments. So obviously the pro with that is that if they're in a situation where they're unable to afford their mortgage, it's allowing to temporarily pause that and help them with their financial status. So that's a big thing. If they had a choice between, let's say, missing their mortgage payments or even going to foreclosure, forbearance is the better choice because it affects their credit less. On the other hand, the big con is that for them to go into a forbearance, they treat it the similar way as, let's say, you go through a modification on your mortgage or even a foreclosure. So essentially what that means is that if you do a forbearance and you don't make your payments, you are not going to be able to qualify for a loan in the future from up to 3 years for an FHA loan and up to 5 years on a conventional loan. So that's a big deal. It's a really, really, really big deal. It also can affect their future payments and maybe make their future payments go higher if they go into forbearance and increase their principal balance.
So it's something that's better than going into foreclosure, but it's also something that you really have to think about. And again, I think, you know, speaking to a mortgage banker to find out what is the best solution for it, but it can be a way to be able to protect your home, at least in the short term. Yes.
Yeah, definitely. I mean, if they had an option of not being able to do it and to avoid it, I always advise clients not to go for it unless it's an absolute must.
Got it. So what about in terms of what's happening now, you know, people needing halts on their mortgages, you know, other people getting 10% more for their homes. What's going on with loans? Is it more difficult? You know, I've heard, oh, it's more difficult to get a loan now. What's the truth on that? What's going on with loans?
It's really not more difficult. Everything is somewhat similar. The only difference is that they're being a little bit more particular in terms of just keeping sure that their income is stable, that they're either working. Anybody who's not working is not going to be able to close on a loan. So if you're in the middle of an application and you've lost your job, it's going to be paused until you get back to work. So obviously with COVID-19, everyone's finances have been affected, whether it's credit or they don't have enough money or their job. So banks are kind of looking at things a little bit carefuler, but the goals and the guidelines have not changed. There definitely has been a little bit more of a concentration on looking at their income, seeing if it's stable. But for the most part, it hasn't been that difficult. It's been equivalent to maybe applying for a loan 6 months ago.
Okay, well, that's good to know. Although if you're not working, then you really kind of have to take a break from expecting to get a loan.
Correct.
What about refinancing?
Yeah.
People want to refinance. What are the first steps there?
Yeah. So refinancing, basically the whole point of refinancing is to take their old existing loan and put into a new loan. So it's pretty simple. Someone like myself who's a professional is going to kind of assess their financial situation. So I'd ask them simple questions. How is your credit? What do you think your house is worth versus the balance of your current mortgage? Have you been paying your mortgage on time? Are you currently still working? And how much of income are you showing? And do you have a little bit of savings ability? And just from that basic information will give me an idea if they can qualify for refinance. And typically I take their information, I look at their finances, and I tell them this is exactly what you qualify for. This is how much your payments are, and this is your current, your breakdown. And people are really seeing advantages because obviously with the rates being lower, they're utilizing the refinances to lower their monthly payments, maybe withdraw funds to pay off debt or even purchase new properties. So really people are taking advantage of where the rates are because it's giving them a huge point of their finances.
Got it. So it's a good time to think about anything that has to do with a mortgage right now.
Absolutely.
What about reverse mortgage? Why do people think it's good to have?
Yeah, so reverse mortgage, the whole idea of reverse mortgage is basically for people who are 62 years or older to be able to take out a loan that they don't have to actually make monthly payments on. So for example, let's say you're a police officer and you've worked 20 years, you've made 140,000, and all of a sudden you go into retirement and your income gets decreased by 70%. But however, your finances, all your bills are still the same. The whole concept of the reverse mortgage is basically to take your loan and have an existing mortgage paid off and have a new loan where you don't have to make payments. And what happens is the interest is just added to the balance. So you take out a $300,000 loan and let's say you wait a year, you're going to see your balance of 305. And then the whole idea of that is that God forbid if anything happens in the future, anybody who's related to you will be able to take on the home and they have a year to do something with the house. So it's really helping a lot of people who are retiring or just on a fixed income that have decreased on their income from the past.
Got it. What about in looking for a home? I know that when I've looked for a home, there's a lot on the market that needs work.
Yeah.
Is there a way to get, loans for that, for renovation, and how does that work?
Yeah. So we do renovation loans, and basically the concept is that you can basically apply any of the renovation costs in the loan, and it's all one loan. So for example, let's say you're purchasing a home for $300,000 and it needs $100,000 worth of work. You do a minimum down payment. So let's say you want to put down $20,000, but it needs $100,000 worth of work. They take the additional $100,000 onto the main loan, which is $270,000. You'd have to qualify for $370,000. So basically, all you really need is a contractor's estimate to break down exactly how you want to cater the home to your needs. House has to be, the contractor estimate has to show that it's livable. And it basically takes a little bit extra time, maybe 30 to 45 days to close. That's it.
That's great. So it really provides more options for people who maybe don't have the $100,000 to put down it to a contractor, but they can still find a home and be able to make it theirs and do it in a way that's financially viable for them.
Absolutely.
So it sounds to me, are you open to, meeting with people before they know exactly which way they want to go? Because it sounds like, you can provide a lot of options that one might not even, I kind of say it's you don't know what you don't know.
Right.
Sometimes you don't even know what questions to ask. So is that something that you would recommend, that someone sits down with you, with a mortgage banker, and talks about kind of goals and?
Yeah, absolutely. I definitely recommend. I mean, it's a free consultation, so there's no cost or obligation. And essentially, having someone like myself discuss about their finances and explain to them, this is the process, this is how much it costs, this is how long it takes, this is what you qualify for, this is the realistic areas of where you can find the home that you do qualify for. I'll be able to direct them. I mean, with 23 years of experience and doing thousands and thousands of loans, especially in the New York metro area, I'm very, very well versed on what are the price points, what are the taxes, how taxes can affect payments, things of that nature, to really explain to them everything. And that's important because it also gives me an opportunity to build trust and for them to get to know that they're working with somebody who's reliable and honest.
Yeah, when it comes to your money, you want to really feel comfortable and feel like you're working with people, whether it's someone who's helping you find a home or whether it's someone's helping you with your mortgage. Yep. Or also with Matt, you know, now we've David's gotten us a home, you know, Amrish has gotten us the mortgage. I need an attorney. So Matt, how has COVID changed the whole process, the contract process, the closing process? You know, how does that happen? Has that been difficult?
It's like anything else, and like everyone else, we've had to deal with COVID in our own way, and it's definitely made things a little bit more difficult. But we're trying to kind of be flexible in how we do things. So prior to COVID, most of my interactions with clients, obviously speaking over the phone, but in terms of signing contracts, even the closings themselves, everything would be face to face. So I'd be meeting with a client for 45 minutes to an hour to review the contract in person, help them fill out the down payment check and take care of everything like that. Nowadays, what we're doing is post-COVID, everything is virtual. So I'm having, whether it's FaceTime, Zoom meetings with my clients. We're signing the contracts electronically, which, we put clauses in the contracts where that's a perfectly legal signature. I use a program called DocuSign, which is a popular one, very simple. And so my clients receive the contracts. I send it to them via email. And then we're able to go over everything, and then they can electronically sign. In terms of providing a down payment, when we used to be sending personal checks, now we're doing wires. Everything now is wires for the most part, directly to the seller's attorney. Because for those who are not aware, a down payment does not go directly to a seller. A down payment is, parks itself in the escrow account of the seller's attorney, and it just kind of sits there until the certain milestones in a deal occur. So now we're just wiring it directly over. Now, in terms of when we get a little bit later on in a deal, we're talking more about the closing. I mean, this has happened a variety of ways. When we first started with COVID, I was doing closings in parking lots. We're all wearing masks, we're wearing gloves, we're signing documents on top of cars. I mean, it was like guerrilla lawyering at that point. But it kind of all depends on the comfort level of not only the buyers and sellers, but also, the attorneys and title closers. Because again, for those maybe not familiar with the process, buyers are taking out a title insurance policy. And I liken it to taking the deal to the doctor. We're giving it its annual checkup. And as long as we get the thumbs up from the doc, we get to move forward. That title closer, is going to be there as well. And if everybody is okay being in a room, we're all wearing masks and gloves with our own pens. That's what we do. We do our best to separate, maybe separate conference rooms. At my office, we put people in separate conference rooms. And what I've been seeing a lot of are sellers not attending the closings because they have a lot less to do. They're just signing a couple documents and taking the money. So what their attorneys are doing, we're having them pre-sign documents, and we're also having them most of the time give us a very limited power of attorney. So the attorney, we have the ability at that point to sign documents on their behalf.
So you said power of attorney. Now, I know power of attorney from wills and estates. Like, is that a big thing, giving someone a power of attorney?
I'm taking over your life, guys, if you give me the power of attorney. But
that's it.
So, I have a lot of my clients get a bit squeamish when I'm asking them to give me a power of attorney, because the powers that they have to give, and again, maybe for those who aren't aware, what a power of attorney is, the person, let's say the seller, it's one individual. They'll give me, as their agent, they're the principal, they'll give me the power to do a variety of tasks on their behalf. And these have to be signing tax documents and a variety of things. But it's not where I can now go into your banks and take everything from you. It's very limited. And we specify these to say they're only for, let's say, the sale of 123 Main Street, just to sign all tax documents and things like that. But again, 99.9% of these documents are pre-signed, where I'm either meeting with my clients before a closing, a couple days before, or we're FedExing back and forth because a lot of people really are not comfortable leaving their home.
That makes me feel better about power of attorney. What about, you mentioned about the title. Now, has time frame changed for title searches with COVID?
Tremendously. And, we've seen it a lot more, or in my opinion, a lot longer timeframes in Nassau and Suffolk County than we have in the 5 boroughs. The 5 boroughs are mostly online. They're the searches that these title companies have to do. They're examiners. It's quicker to get things from the city, but on Long Island, we have towns and we have these local municipalities, whether they're villages, where you have to get what we call municipal searches. These are our certificates of occupancy, which are legalizing improvements to property, or finding out if there's a violation or an open permit. And I do actually want to make one statement. David brought up a great point before about proactive agents. As an attorney, I love a proactive agent, because when I know already when I'm representing a seller that there's a sidewalk violation, or that there's a judgment here, we can get that ball rolling immediately and not wait now for the delays of title. So if you have a proactive agent like David is, they're worth their weight in gold in that way. But to go back to the question, we're finding these municipal searches taking even longer. And we have certain towns on Long Island, town of Babylon, town of Hempstead. These are towns that typically have very long time frames to receive these municipal searches. And now it's just even worse. It's taking a lot longer. So when maybe pre-COVID, a standard real estate transaction would be 45 to 60 days. Now maybe we're a little bit closer to 60 to 75 days, depending on the location, because of these title delays.
Wow. Okay. That's good to know. And just in terms of planning, when you're thinking about closing, considering that time frame. But I did think of David when you said that. And so that can probably make things go a little bit faster.
Oh, it's tremendous. I mean, the agents I work with, and again, David is a perfect example of that. The ones that when they have a listing are going and finding out, we have a sidewalk violation, we have a lien, we have a judgment. Now I have all my tools, I have my ammo, so to speak, before I even get started. So I can maybe try to negotiate a settlement for a judgment, or now we can start the ball rolling to take care of these violations. And also on a buyer's end, I think it's almost more important, because now when you have a proactive agent, they're looking to see maybe if there is a violation on this property, because buyers, you have no idea until you get that title report. And now that could be 3-4 weeks into a transaction. It's a lot better to, before you're putting down a significant down payment, to know, oh, wait a second, I know we don't have a lot of hair on this deal. We have, it's clean. So it's wonderful when I have that kind of teed up for me.
Right, I'm sure. So now with COVID, is there language being added to contracts around this unique time?
Absolutely. One thing I think that, we've seen, unfortunately, maybe some bad aspects of humanity when it comes to COVID, but I think one thing we've definitely seen is people playing nicer in the sandbox together. And in the real estate community, I think we've done a really fantastic job in this. We're not being as draconian with our language in terms of holding people's feet to the fire if they've been affected by COVID. And specifically, Nassau, which is a realtor organization in New York, they provided pretty early on, which I think has been a nice rider or an addendum to a contract. So again, for those who might not be aware, a standard real estate contract has a main part of a contract, then a rider, which is more pointed language. And then we'll add this third piece on, which is this COVID rider that basically states that, should either the buyer or seller be affected by COVID, whether that's losing their homes or having a medical issue with it, we're allowing timeframes to move back. And we've seen it, unfortunately, I've seen it with many clients. They've lost their jobs or they've been furloughed. And now, and Amrish, I think, could speak to this much better than I can. But people who were just phenomenal qualifiers for a certain loan, or even for a program, now they've lost their job. Even if they're furloughed to 80%, now they can't afford it. Their debt to income ratio flips, or maybe a program went away because of COVID. So it's something where this extra language is there to protect both parties.
I know that you're going to be sharing that COVID rider with our participants, so you can really see what you're talking about. But it's,
Absolutely.
you know, it's a new world, so we have to be thinking about these things. Now, you know, I have a friend who's an attorney. She focuses on divorce and civil litigation, but could I just go to her, or what's the benefit of going to someone who, for a real estate transaction, is a real estate attorney?
So, you know, not to maybe knock my my colleagues on the bar, but you know, we all in our professions, we specialize in things. And a divorce attorney, a criminal attorney that's not familiar with real estate law is not going to have the experience to know, okay, well, this house is in Queens, and you know, we're dealing with the DOB there, Department of Buildings, whatever it may be. We have specialized knowledge, and we know how these things work. You know, you're not going to go to your general practitioner to have them perform surgery on you. You know, you're going to go to someone that specializes in that field. So, and again, I think David and Amrish could attest to this. I know I'm not the happiest when I find out that it's a, let's say, a criminal attorney on the other side of a real estate transaction who does not know how a real estate transaction works. They're not sure of the specialized statutes and laws that affect a real estate transaction. And talking about these violations and liens and judgments, they don't have that specialized knowledge to know how to take care of those quickly and directly. I do this every day of my life. So, you know, you could come at me with any type of lien, judgment, violation, open permit, and I'll know how to handle that for you. And we'll get it done as fast as we possibly can. And someone who might be phenomenal in a courtroom, and you know, I don't want to, you know, maybe I'll hire them if I ever do something bad with a criminal aspect, but I'm not hiring them to handle my real estate transaction.
It makes a lot of sense. I mean, obviously, you know, the team that you put together really is going to talk to how good your experience is from a financial standpoint and just from an emotional standpoint, because real estate can be emotional. So you really want to make sure that you have the right team in place when you're buying and selling a home. So, you know, one thing I'd love to ask all of you, because it's so great to have you here and I want to give our participants something special, is what's a tip you've given your family and friends from your professional expertise that you say to them, make sure you do, or make sure you, what's a special tip you can give our participants? Who wants to take that first?
I mean, I guess I'm the only one unmuted, so I'll go first. I think what you said, Elizabeth, would be my main advice. Have a good team around you. You know, when you work with professionals like myself, like David, like Amrish, these are people who have years of experience. We've all worked together. We know how each other work. We're seamless with it. And, you know, you don't want to have, you know, again, your cousin who's an attorney here, and, you know, I have a part-time real estate agent who's a friend of mine that I'm going to, you know, go buy my house with. You want people that do this professionally, that know how each other work. And, you know, like you said, there's an emotional aspect of it. We have the expertise to know how things go. And again, when everyone's worked together, we work seamlessly.
I'll go second.
Amrish, take it next. What's your mortgage tip that our participants are lucky to hear from you now?
I'll tell them two things, two important things. One, always listen to the professionals, and not just me, but everybody else, but listen to the professionals. Our experience, we're telling them how to do certain things because we're doing it to help simplify the process and help them get things done. So if you listen to the professionals, the process is always going to be seamless. And number two, I always tell customers, be very good with paperwork. Loans are all about paperwork. So if you're really good at paperwork, it's a super easy process.
So save all those papers.
Absolutely.
Great tip. David?
All right, I'll jump in real quick. And I absolutely agree with what these two guys said. If you have a good team that is with you every step of the way, your process is going to be seamless. Okay, and I've worked with both these guys before. They're really, really good. But I just wanted to speak from a real estate perspective. You know, anybody that comes and asks me about real estate, you know, there are so many agents out there that's very, very hard for people to kind of figure out who's, who knows what they're doing and who's not. And a lot of people will say, real estate agents, they're all the same. They put on MLS, the agents will come and show it. But I think one thing that differentiates a good agent from a not so good agent is their ability to help you negotiate. And that's not something that they necessarily teach when you go and get your real estate license. Okay, you want to work with somebody who knows how to negotiate on your behalf. Okay, for example, if you're somebody who's selling a home and somebody puts an offer on the table, and a lot of agents will say, "Oh, we'll meet them halfway, and we'll come to a middle ground," and that's the extent of their negotiation skills. But if you know somebody who knows the difference between a seller's dollar and your buyer's dollar, that is something that they can use as a tool to negotiate. For example, if you wanted, if a seller wanted to get another $10,000 for their house, $10,000 to a seller, to a buyer sounds like, wow, it's $10,000. But if you can have somebody who can help crystallize to that buyer that $10,000 is not really $10,000, it's really another $30 in your monthly payment, which is essentially $1 a day, that's a lot more palatable to a buyer. And that's one way that you can help to get a buyer to come up to a higher price for a seller. And that's just, these are techniques that people are trained to negotiate know how to do. Whereas most agents who just come out and they have their license, they don't have any kind of training. They don't know how to go about doing those things. So whereas a lot of real estate is very similar, when it comes down to your last, getting the best price, whether you're a buyer or a seller, knowing somebody who can actually negotiate on your behalf, I think is the most important thing. So that's, I would definitely grill whatever agent you're speaking to about how they go about doing that. That's
great. Great tips. Thank you. So we did get a bunch of questions from our participants. I'd love to be able to ask. One question that came in is, and this is for Amrish, what loan is more beneficial to a buyer, conventional or an FHA loan?
It's a good question. So that's relative to, there's a lot of variables that are relative in terms of answering that question. So it depends on what they're buying, property type, if they're buying a 4-family versus a 1-family. It depends on how much money they have, if they can put down 5% versus 20%. And it depends on, their income, if they have strong income or not. There's a lot of variables that kind of figure out what box you fit into. That's part of my job. So I'll give you an example. Let's say you're buying a 1-family home and you're going to put 10% down, but your credit is mediocre. Let's say you have a 660 credit score. So both of those boxes with that criteria will allow you to fit into FHA versus conventional. The difference is that my job is to analyze what's going to get you the better rate and what's going to get you the better mortgage insurance. Anytime you put less than 20% down, you're obligated to pay mortgage insurance. So my job is to evaluate, hey, what's going to be the cheaper loan for you? Is it FHA or conventional?
Very good to know. David, I have a question for you. Someone is interested in selling their apartment in a co-op. What's the difference between staging it or just leaving it empty if you want a quicker sale?
I always recommend, if you have furniture in a place right now, you're better off staging it with the furniture that's there. I'm not asking you to buy new furniture or anything like that. A lot of people mistake staging for interior design. They're actually the exact opposite. Okay, a lot of staging really is just taking what's in your house and decluttering, moving things around, so that people can actually imagine themselves living in that house. Unfortunately, when you have an empty house or an empty co-op, empty houses have no personality. People go in and they see blank walls and they see blank floors. And it's very, very hard for them to imagine themselves living there. And the whole point of staging is to make the house as universally appealing to as many people as possible. And by staging it, people can actually come in, and even if you have to move the furniture out later, at least when you have the photos there, people can see this was a dining room. This is where, where the couch went. This is where the lamps are. And it also gives scale. People can look at an empty room and they don't really know what fits where. But if you look at a house that has furniture, you can actually see, look, a full dining table can fit in here, or a full sectional can fit into this living room. So having furniture is definitely going to help you sell the place better, at least from a photography perspective, than having an empty room.
Okay, thank you. Matt, what is an average cost for a real estate attorney? You have to unmute yourself.
Yes, I do. There you go. Many people would tell me I should stay muted, but I would say usually about $1,500 roughly is an average real estate attorney cost. And one thing I will say, don't get sold on an attorney that is going to charge you $750 or $800. You know, like a lot of things in life, you get what you pay for. You want somebody who's a professional, that communicates, that knows what they're doing and can handle problems. And that, again, as I said, is around $1,500. Unfortunately, you find maybe more of the bargain basement attorneys, you get bargain basement service.
Fair enough that you get what you pay for sure. So we have a few other questions, but I want to be respectful of people's time. So I'm going to ask a couple more questions, and then we'll look to address those in email. But Amrish, does having a credit card debt of $6,000 impact the ability to qualify for a loan?
That's a really good question. So the whole concept is the more debt you have, the less you're able to borrow. So having something like $6,000 of credit card debt, can it affect you borrowing more money? Yes, but it doesn't necessarily mean that it's going to affect the amount of loan that you need to buy the type of home. So just because you have $6,000 of debt doesn't mean that you're not able to qualify for the type of loan that you want. The reality is everybody's got debt, right? We all know that we have a little bit of credit cards or car loans. So, you know, it depends on the situation. If their credit is strong, they have great income, but that kind of gives you the better evaluation of what you can afford.
Okay, great. And last but not least, let me ask you, David, what someone has been in their house for over 40 years and has never sold a house before. What's a reasonable fee that an agent would get?
Okay, so legally, I'm not allowed to discuss commission, okay, because commission is always negotiable, okay? But what I can tell you is this, okay? Just like what Matt was saying with regards to attorney, you don't want the bargain basement attorney. You don't want the bargain basement realtor either. And I'm just going to give an example. Okay, let's say all real estate agents work on commission, and a lot of times that commission is split between two brokers, the listing agent and the selling agent. Okay, so if you have a real estate agent that is, this is how he puts food on the table, and he goes and shows homes, and he feeds his family based on the commission. And you have a house out there at 3% commission, you have a house out there at 4% commission, you have a house out there at 5% commission. As a realtor who does this for a living, which house are you going to show first? You're going to show the 5% house first, and then you'll show the 4% house. And then the last house you'll show is the 3% house, because that makes you the least amount of money. So when it's really that simple. Okay, if you're paying no commission out, you're going to have a lot less agents showing the house, because after they get paid their commission, a lot of them still have a split with their broker, then they have to pay Uncle Sam. So, you know, don't be so short-sighted to think that, you know, just because the commission is lower, you're actually saving money, because in some ways you actually may be losing money, because you're going to have less people showing the house. And the more people show the house, the better chance of getting that better price. So that's the best I can answer that question without saying a number and getting in trouble with the government.
Right. Well, that's fair. And I think it also points back to what you said earlier about, you know, making sure that your agent is a good negotiator and making sure that you're picking the right person, because you want to pay a fair amount to that individual, but you want to make sure that that individual knows the things you're talking about, like staging and photography and negotiation, and knows the neighborhood and can advise you, and all those things are very important. And if you have an agent that does that, then they've earned the commission. So, you know, doing that work ahead is so important with what you said.
Sometimes, you know, you have to think that if somebody comes in and right off the bat, they say they'll do it at a low commission, then you have to think about how good is this person at negotiating, because they just failed to negotiate their own income. How hard are they going to fight to negotiate the price of your house? Okay, if they can't even show their own worth at the beginning of the process of what they're worth, how are you going to expect them to negotiate better when it comes time to getting you the best price for your house?
That's a good point.
Keep that in mind too.
Well, this has been wonderful. You've answered so many questions. You've told us so much about the buying and selling process. And I wanted to let the participants know that David is going to be sending out to you the top 10 things to ask before hiring a realtor, which is very important. Amrish is going to be sending out why who you have as a mortgage broker matters. And Matt is going to send out that COVID writer. So you'll be able to get all this wonderful information. And I will be sending out an email that you'll be getting tomorrow with all of their contact information. You'll be able to watch this again on the Schneps Media YouTube channel. Thank you, gentlemen. You really have shown us the power of a phenomenal team and how you can really hold our hands through buying and selling real estate, even during the COVID pandemic. And I thank you so very much for being here and spending our time and educating me and our participants.
Thank you, Elizabeth.
Awesome. Thank you so
Pleasure.
much.
A pleasure being here. And if there are any questions that you guys have that we didn't answer, Elizabeth, just send them over to us and we'll make sure we get the answers to those to whoever is asking them.
Perfect.
After the webinar.
Yes, I will get all the questions out and they will be able to send to you the answers to those questions if we didn't have the time to address them today. Everyone, please stay safe and stay healthy. And thank you again so much for joining us. Hope you join us on another Schneps Media webinar in the future, in the near future. Take good care, everyone. Have a good night.
Thank you, everyone.
Bye-bye.